Hello and welcome to the Storage Report. I am your host, Thaddeus Campbell, Director of Business Development and Strategic Branding. That's a mouthful, from S3 Partners, and host of the Stories Behind the Door podcast. Glad to be joined by my friend Chris. Why don't you introduce yourself?
That's great to see you, man. Chris Berg, land acquisition with Abernathy Holdings. We are looking for dirt sites in California, Arizona to build self-storage on. Also hosted the CRE podcast. We got some very interesting data that we want to share with you today that might show some positive trends within the self-storage world. So if you want to start as asking some questions, Sad, you want me to jump in? You tell me the direction you want to go, my friend.
Listen, you've teased this so well, and I know we've talked about this a little bit off camera. I'm excited to hear your thoughts and kind of get background on what it is we're on to share today.
Yeah, if you don't mind, then I'm going to jump in and share my screen here and walk people through some things that we want to share. So when I was recently at Napa for the CSSA, Tyson Huebner with Yardi just does an amazing job breaking down data. And so I was going through his slides, and one of the things he shared, he's talked about Google search trends for self-storage. This is across the country. But what I want to invite people to do, and you just be the ombudsman here, Thad, if you want to poke holes or ask questions as we go, but I want to invite people to really look at this as almost like a stock ticker. We're going to focus on this blue dotted line because this gives you can see from January 18 through January 25. And what really jumped out as you and I have been talking about this is you look at this right now, this graphic goes through the end of April of 2025. So again, if you're thinking from a stock, you're like, okay, this thing is now in line with about May of 22, May of 20, May of 19, which is a very positive trend. Because the other thing that I think is really intriguing, you had a higher low in May of 22 and May of 23. Now, why that matters is because, as you and I talked about last week, year over year rental rates since right around May or June of 2022 have actually been negative within the self-storage world, which is very, very rare, which I can show here. This is a great tool in Radius, but it shows here sort of year over year growth in rental rates. And I'm just sharing with Extra Space and Public Storage, which you can see during the COVID time. I mean, dude, look at those numbers.
That's the timing of the 61% increase in the stock value of the REITs during COVID. And you can see it laid out in that chart so clearly. Of course, nothing lasts forever. And you see the rather precipitous drop off on the backside of it. What was alarming, I think, Chris, is for an industry that in 40 years had never seen negative growth. And this is the story I kept being told in 2021 when I first got into storage. Hey, we've never seen negative growth. Well, now we're 2 years into seeing negative growth. As you mentioned earlier, maybe some road signs coming up that we're back to what storage typically was.
Thank you. And kudos to you for dropping the word precipitous. That was impressive. So I
gotta make sure my mom and dad know that the college education wasn't completely wasted,
So I want to jump in, and you can see here some of the data points, but it was right around, and I'll go back to it in a second. But as I said, it was kind of that May or June was that higher low. And you can see now August and September, whoa, look at that, negative year over year. And it's really been like that up until basically, January or so of 2025, things started to go positive. And again, I just share that because it coincides with, whoops, I'm going to get to that other one in a minute here, but it coincides with this Google search trend self-storage. Now, is there a direct causation? I don't know, but there's clearly a correlation, which I think for us in the business can go, okay, this could be a really positive thing, especially because, again, this only goes up until the end of April of 2025. And if you notice, typically the highs, and this is the other amazing thing to me, Thad, and maybe you knew this pattern, but the other amazing thing is every year around June is the high. And so what's exciting for us in this,
you stop sharing your screen, I'm going to put up the Google search trends for a second, and then I'm going to put up the another graphic that helps highlight the point you're talking about. I want to point out something you just said, which is the arc of the search trends and how it actually is making us look even better on what you were pointing out with the Google search trends. Are you able to stop sharing your screen on your end?
I am in 1 second. The point I wanted to make is the fact that this only goes through April. And since April, you can see, is already basically lined up with the June of 22, June of 20, June of 19. I think it's a pretty safe bet to say we're actually going to have a new high. It's not going to reach, June of 21, but a newer high, which tells me the trend's going to be higher rates. And as you and I have talked about, now I just need a good options guy um, on some particular stocks that I won't mention here because we're not going to give financial advice in this show.
No, we are not giving financial advice. I will simply tell you that I am investing in some asset class, some companies in an asset class that I'm very familiar with right now. I want to put this back up again. Why is that not showing here, kids? Let me hit this. Hit that. There we go. I managed. Okay. So you were talking about this trend, right? If we see like May of 2020, then it hits the peak. And then there's clearly a massive increase during COVID as people were being forced to work from home and their kids doing school at home and they needed a place to put their stuff. I mean, the search results, the search trends skyrocketed clearly. You were mentioning earlier, like this January 2025 at the very end, we're not at the peak of what that's going to be. Why does that keep popping down? Are you still seeing that? I don't know what happened there. I had that graphic up and then it just popped down. There we go. Yeah. I mean, ostensibly that, and I'm just throwing in 25-cent words just to make you happy now. This arc in January 2025, when we get May onto this chart from Yardi, it's going to be even higher than where it is right here. And so now all of a sudden you're getting back to those pre-COVID numbers. And that's a really good sign for us as an industry. You mentioned something else that I think is important. I'm going to click over to this graphic. This is starting rental rates for the REITs. And you're seeing this downward trend that correlates with what you were showing earlier with those year-over-year drops in overall income. You're starting to see this spike. Q 2024, like late Q3, early Q4 last year, where rates are starting to go back up again. They're advertised rates, right? This is the REIT advertised rates is the dark blue line. I don't know what is going on with my screen shares, but it keeps popping off. So I think lines up with what you said as we're starting to see this increase in the volume of people looking for storage. We're also starting to see an increase in a slow incremental increase in the advertised rates that REITs are showing. Here's the question that I have for you. We spent last week on the storage report talking about some of the legislation that's happening. So there hasn't been a whole, ton of increase in the amount of movement in the market, right? The housing market hasn't sped up in any way, which would typically be a driver of increased demand. Why are we seeing more Google searches? One, and then two, is the increase in rates from the REITs tied to the increase in Google searches, or is it a response to some of the legislative things that we've been seeing going on? I'm interested to get your take on that.
The great question. I'll start with the second one first. Is like I just said a moment ago, I can't say that the Google search trends is causation of higher rates, but there's definitely a correlation, which I mean, it maps it so well. It's hard to ignore, right? Let's just put it that way. But you read my mind. I'm like, okay, so this is great to see this trending, but the question is why? Now, to get to your answer, again, I don't know if this is true. All I do know is recently, and I never in my life thought I would see this headline, but this week, I almost laugh when I say it. I saw the headline. Wait till you hear this, bro. Computer science engineers are facing twice the rate of unemployment than art history majors that have recently graduated.
I saw that same thing.
Let me repeat that so people hear. Computer science engineers are 2x unemployed compared to art history recent graduates. And I'm like, what? So my point is right now the younger demo is at 5.8% unemployment. So is that a causation of maybe they're moving back in with mom and dad, they're storing stuff, or they're doing more multifamily? Again, I don't know exactly, but it was very interesting to see this, watch this, precipitous spike in Google search trends of self-storage.
Education is the highest form of flattery, my friend.
But I want to share one more graphic that I think was maybe as shocking as what we shared up to this point. So we just talked about, hey, you know what? Demand, Google search. This, as you can see as I go live here, this is when things are really peaking as far as we saw with rental rates, right? With what I shared a moment ago. And according to this trend, And now they're going to say June is not obviously full data,
Yep.
but according to this trend, we are at least at this point, maybe even going to surpass it for Google, for self-storage search in
Wow.
Google, which obviously we're not going to have those same rates. But boy, if it continues in this trend, that's a very, very good sign.
Yeah, that's, listen, I kind of laugh because the struggles in self-storage that our industry faces sort of pale in comparison to some other industries are going. You just mentioned computer engineers, right? AI has kind of driven a lot of those jobs out. So the things that we're struggling with as a self-storage industry tend not to be as calamitous as what a lot of other industries go through. You sensing a trend in this episode?
Like,
You
who
got me
knew
started.
that we were giving an SAT vocab quiz?
I sort of laugh about this a lot. Other industries wish they had to feel the pain that self storage feels when things are going sideways. But listen, it's not going out on a limb to say that there's been some fear in the industry because they'd never faced those kind of drops in rates before. They'd never seen those kind of challenges in the industry before. So to start to see some of those signs of maybe coming out the other side, big, deep breath of relief, I guess, is what I would say in the industry.
Well, a couple of things I would add. I had a great conversation with Tom DeYoung late last week, and he's been in the business for 18 years. There's a lot more institutional capital that's putting themselves back in the space, and I think you can start to see why when you see this Google search trend, you see rates going in the right direction. But the other piece of the pie that's really important is that there's been such a diminished amount of supply because year-over-year rates have been negative. So if you can just kind of weather this quote unquote storm, you can see yourself in 27, 28, those assets that are opening doors or been open for a year or so, leasing up, I think are going to bear out and prove to be really, really good assets.
I think this is such an amazing point that you bring up, right? In 2021, early 2022, we were at the height of the frenzy of the market. Everyone was excited about their ground up development deals that they had in the pipeline. And quite frankly, a lot of those deals faced some significant challenges if they even got out of the ground. Fast forward now in June of 2025, and these people that have deals in the pipeline right now, like yourself, man, there's been some stress, right? It's been like, do I really want to do this? Should I really go right now? And what's ironic to me is the reality is that these deals that are in the pipeline today, I think are poised for way greater success than the people that were in the pipeline in 2021. Look, if you open your doors in 2023, 2024, your path to economic occupancy changed significantly. We were underwriting things to 18-month lease ups because stuff was leasing up in 8 months in 2020, 2021. And yes, would it have been smart to be a little, if I was Lauren Feeney, I'd have been a little smarter and kept my 36-month or 42-month lease up in my pro forma. You understand the point though. Today, I think what you're going to see, we're going to see way fewer developments come out of the ground in the next couple years. At the same time, millennials and Gen Z are renting at a higher percentage. You're seeing a greater number of people actually demand the product. As rates start to go up again, I think this is actually a time where if you're ahead of this curve with your ground up development pipeline, you're in a really good spot.
The confluence, how's that for a word?
Let's go. Let's go.
The confluence of what's happening right now, because the other thing that I'll add to what you just mentioned about the Gen Zers really using storage as kind of a garage is also when you listen to the home builders earnings calls, a lot of them are starting to build smaller homes, right? So they're going to need more storage. So I just think the confluence of all these different factors are going to bode well for people that can continue to build.
I love it. By the way, those home builders are coming to my small bay flex parks. Just as an aside, we're gonna try and steal a little bit of that business. But very interesting fact I'll share with you: from 1985 to 2024, the number of small businesses in America with at least one employee tripled. The percentage of those businesses that were in contracting went from 7% to 13%, almost doubled. So the amount of people in our country who are tradesmen, who are plumbers, electricians, HVAC, drywall, window installer, kitchen repair, there's a lot of those people out there and they need space. And it's one of the reasons that storage is still doing pretty well. And it's another reason that I'm looking at small bay flex as well. So I didn't mean to sidetrack there, but you brought it up and I couldn't stop myself from going down the road. It's a reason why we believe in both of those products, quite frankly, because there's a lot of demand for it.
Well, I'm glad you brought it up because I'm going to continue to plug this to city leaders and city planners, is the fact that, cities don't necessarily love self-storage. And I want to remind them, if you're looking for businesses, employment, things of that nature, self-storage, small flex is an outstanding entrepreneurial incubator. It gives these people short-term leases. They can grow really quickly and easily. And so for the planners out there, if you're looking to build that economic business, the economic development in your city, keep in mind that storage can be a really great entrepreneurial incubator.
I'll give you a real world example. A security guy, gates and cameras in Colorado, has 4 different storage units for his stuff because he can't find one spot big enough to have everything there. And the minimum drive between one storage facility and the other is 45 minutes. Ooh. So if you think that there's not a need for this product, you're just not paying attention to what's really going on in the world. And as far as the way our economy is going, I didn't even mention in 1985, the percentage of small businesses that were internet based was 0, right? Now it's in the double digits. So you have Etsy, you have Wayfair is a big company, but you get my idea. eBay, people selling eBay businesses. Those people need space to store their stuff. And so, this is why we're still seeing, even with the housing market the way it is, we're still seeing demand in the self-storage space be very, I wouldn't say strong, but you're starting to see rates start to go up again, and you're starting to see search trends go up again. Very good sign long-term.
I think that's a wrap. You summed it up perfectly right there. Hey, things are going in the right direction as of this moment. Hopefully it'll continue that way, and we'll see how this bears out. I think what's going to be really fascinating to see the Q2 earnings reports and earnings calls from the REITs, and if this data that we're talking about today bears out to be true in those earnings calls.
Listen, I'm Thaddeus Campbell. We will be back next week, Thursday, 3:30. Chris and I are going to make this a weekly deal. We feel like there's enough things going on in the self-storage world that people need to know about, that we can come on once a week and share some current news with you folks. I'm going to give a shameless plug. I mentioned I'm the host of the podcast Stories Behind the Door, which may have come as a surprise. I am newly with S3 Partners, and with the new job, there's a rebranding of the podcast. I'm very excited. 11:15 a.m. Eastern Standard Time, Tuesday morning. We are going to live broadcast the first taping of that new podcast. Matt Lang, president of Go Store It, Madison Capital Group, is going to be my guest. An unbelievable dude, great company. Side note, my son is in Charleston, South Carolina right now, training at the call center for Go Store It. So shout out to them, Bo Agnello and the team, for bringing him on board. Really looking forward to that interview with Matt Lang.
And one thing I'd like to wrap it up with, if you're out there, there's a lot of great people in this space, and there's a topic you want us to focus on, talk about, discuss, hit us up on LinkedIn or whatnot, and we'll be happy to do some research on it and shine some light on it.
Yeah, I love to have conversations with any of you about current topics we need to hit. He's Chris Berg, CB at AbernathyHoldingCo.com. I'm Thaddeus Campbell, Thaddeus as S3.Partners. Feel free to reach out to us, and we'll see everybody next week.